Now, market watchers expect choppy trading ahead of the forthcoming elections as investors also anticipate the release of more 2022 full-year corporate earnings with accompanying dividend declarations. Ope Oluwa, research and strategy analyst at Cordros, joins me now for more market updates. Ope, thank you for taking the time out to join us today.
Thank you for having me today.
Let's start with the elections. 5 days to go. How's the market feeling about the election? How nervous are investors? And where, in your opinion, will investors be taking shelter in? I'm talking about stocks.
Yeah, so thank you very much for the question. I think it's pertinent to note that investors right now are maintaining a risk-off sentiment towards risky assets, equities most likely, most prominently rather. And we've seen that domestic investors for one have been the activity on the market today has been quite muted, with most of the activity in the market today coming from the FPIs. So we've seen FPI interest in the top banking names, GTCO and Zenith Bank, and we continue to see them remain net sellers of Airtel Africa. So in terms of how we think the markets will basically see off the week, proceedings for today basically gives us an insight as to how investors are currently feeling in terms of anticipation of elections. So just like you rightly mentioned, just before you just like you rightly mentioned as initially, right, we expect that the uncertainties that continue to surround this the nation's presidential election continue to cause muted activity from investors, especially for equities.
Right. In the meantime, we're expecting more full-year earnings from the 2022 financial year. But I'd like to ask you, what do you make of the numbers so far? The numbers have been released, and what, in your opinion, do the numbers say about the operating environment in 2022 for these companies, how it affected their key line items, etc.?
Yeah, so I think the key thing that you'll be able to bring forth from the earnings that have been released is the cost pressures that currently have in the Nigerian market. When you consider the elevated inflationary pressures, pressures from the FX side of things also, and for producers of goods and services who require raw materials, seeing higher material costs, actually from commodities also significantly affect their profitability and margins overall. So I think one key thing to note is that companies have continued to show resilience despite the severe operating environment, and I think it's quite laudable that they've been able to put out such kind of numbers amidst the prevalent issues in the operating environment. Yeah.
Now, while an issue like FX, I know that that was broadly felt by most companies, but would you say that there were some companies that are more affected than others?
Yes, definitely. Most companies who import raw materials into the Nigerian market are the companies that believe that are the brunt of the issues that come with the current FX in the goods that we have in the domestic economy. So we cite the consumer goods names, the agro-allied companies, and some of the food companies also that basically import significant portion of their raw materials. I also talk about the cement players also, import some of their raw materials into the Nigerian market. So FX availability and sustained uncertainty surrounding FX and possible devaluation, if there's any, continue to be factors that significantly affect this company rather.
As far as the numbers go, any surprises so far for you? Maybe some companies you didn't expect to either do well or do poorly?
Well, I think the numbers have pretty much come out as we expected. Has pretty much come out as we expected. So by the time more numbers come out, to be able to ascertain if there's been any company that has not done as much as we expect.
All right. Talk to us about the stocks that are on your radar. What are you telling your clients in terms of stocks to put in their portfolio, where to be, put more weight or shed here and there, etc.?
Yeah, so the mantra that we keep on repeating to our clients is to chase stocks, that are fundamentally justified. That the basis for investing in these stocks are very strong, and not to basically chase momentum, basically. So the bellwether names on the bourse are some of the names that we favor, and names that typically offer high dividend yields to investors are some of the names that we are putting forward to our clients to invest in. So, yeah.
All right. Let's talk about how our stocks. I know it's probably too early in the year to say, but how are
Yeah.
stocks here faring against their emerging market peers, perhaps maybe from an EPS or a dividend yield point of view?
Well, understand, relatively, Nigerian market is still undervalued compared to where its peers are, basically, and that is as we have significant value in the Nigerian market that is not tapped, given the depth of investment in the market compared to levels in 2019, 2020, basically. So the Nigerian market basically still remains positive.
Right.
We still see significant potential for the market to basically meet up with emerging market peers, basically,
Right.
especially if some kind of reforms are possibly after the election, after the election jitters have washed off. Probably see the market trade at the levels that investors would like it to trade at.